the buyer's perspective, wind back the clock a few years, folks are paying $1,400 a month for their principal and interest, and now they're suddenly paying $2,100 a month, and $700 a monthly increase is a lot for many Americans. Great. So on the sell side, with less buyers being able to afford homes, that means less transactions, of course. Sellers are kind of stuck in their homes, sitting on their equity, unable to move. So the interest rate environment has created this flywheel where less buyers in the market means less sellers moving, which means less buyers in the market, which means less sellers moving, and so on and so forth. So we're seeing increased hesitation to list and like all these downstream effects on the sell side from interest rates.
Ben, let me ask you a question right there, Ben.
Sure.
A ton of us probably have listings right now that's sitting on the market right now. A lot of
Yes.
agents that I know don't ask their clients or don't know if their clients have a FHA or VA loan. Why is that beneficial for this situation?
Yeah. You're hitting the nail on the head here. So I'll kind of just dive into what we do. So the way we're trying to solve the home affordability crisis is through assumable mortgages. So what does that mean? It means that a buyer can take over a seller's mortgage, and the seller is completely removed from all future liability, no further obligations to the mortgage. It's a 100% clean transfer. And two types of loans are known to be assumable by law. That is FHA and VA, as Lawrence pointed out. And why is this important? It means that buyers can suddenly benefit from sellers' low interest rates that they obtained in 2020, 2021. So instead of taking on a 7% rate, a buyer can take on a 2% rate, a 3% rate. And why does this matter for agents? More buyer activity means more commissions, more seller activity means more commission. And it's really a win-win for everyone involved. Buyers get low rates, sellers take their equity out, and agents get paid on both sides of the table. And a lot of folks don't even realize that their home has an assumable mortgage. A lot of agents don't realize that their client's home has an assumable mortgage. So one of the things we try and do at Rome is educate agents on whether or not their home has an assumable mortgage, and then how to pitch that benefit to prospective buyers. Okay.
Yeah, I
Yeah,
appreciate
Julius,
that. Yeah, that's what I really wanted to get out to everyone. And Mandy, me and you talked about this a little bit on our sphere of influence and social media mastermind. A ton of agents right now have listings or have buyers that are sellers sitting on the sideline. And Ben, we had a good conversation not too long ago about this. Oh, actually, me and Julius had a good conversation about this. And I have sellers right now. They call me on this. And they're sitting on the sideline waiting because they have a 2.8% interest rate in an FHA. I didn't know it. So thanks to Julius and you for having this conversation with me. But everyone on this call right now should be talking to your sphere right now. This is prime.
yeah, for sure. For sure. It's a huge opportunity that, goes unnoticed in the agent community. And I would say about like 20% of listings roughly are assumable by law. So sorry, Jen, do you have a question?
Sorry, yes, I have laryngitis, so pardon me.
Oh, sorry to hear that.
That's okay. But I was curious in regards to the assumable loans, um, because not all lenders allow it. There's overlays that are there. What do you find in combating those type of issues? Because sometimes they have maybe higher credit scores that are required, or they have high, lower DTI. I mean, I don't know. I feel like there's overlays that could prevent it from being assumable as well. What do
Well,
you
so all FHA and VA loans are assumable by law. So a lender cannot reject an assumption based for no reason. Buyers will have to go through a normal application and underwriting process, and will need to be approved for the loan. So the lender will look at the buyer's debt to income ratio, their credit score, their rental and mortgage history, their income, and all that jazz, and they'll ultimately need to be approved by the lender. But yeah, they cannot. The lender cannot reject an assumption without reason. And one of the services that Rome offers to prospective buyers is pre-qualification, which greatly minimizes the uncertainty of whether or not a buyer will be approved. So that we have a lot of services to help make sure that transactions move forward. And pre-qualification is something that we recently launched that it really gives everyone confidence that the buyer will be approved and the deal will ultimately close. Because we don't want anyone wasting their time, going through a transaction, ultimately just to have the deal die like 45 days in. So that's
No,
not a priority.
Yeah,
that's
Ben and and Jen, Ben is going to get into everything. I know we got some questions coming in right now. Ben, I'm going to let you finish, and then we're going to hold our
Right.
questions to the end. Go ahead and get through because I know towards the end we're going to answer all these questions. So let's go ahead.
Yeah. So I kind of hit on this already, but what mortgages are assumable? FHA and VA. We can because sometimes conventionals are assumable, but we don't touch those because we just don't know whether or not they're assumable. You need to look at the underlying loan documents. So how does Rome work? So we built an end-to-end platform that caters to a buyer's home buying journey, and that is completely revolves around assumable mortgages. So we start with the discovery. So we have our website's kind of like Zillow for assumable mortgages. You can browse all homes currently for sale with FHA and VA loans. So I think we have about 75,000 listings on our site in our active states. I think we're active in 15-ish states. And buyers can use Rome to see what's available in their desired locations that has an underlying assume a mortgage and what that rate is. So once a buyer finds a home that they're interested in, we then help at the contract stage. So a few things we do, we help the buyer get pre-qualified. As I mentioned, we help the buyer take on secondary financing. So one of the main issues we see with assumable mortgages is that equity gaps are too high for buyers to actually secure the home. Like for instance, with home appreciation and origination in 2021, like you'll often see like down payments with an assumable at anywhere from 30 to 40%. So one thing that we've done to reduce the friction there is create a secondary financing product that would go behind an assumable mortgage. And we take to think about the cost of that on a blended basis. So if you take call it a 2.5% mortgage for 70% of the purchase price, and then for the remaining 20%, you take an 8 to 10% second mortgage, then on a blended combined basis, the overall rate will be 4.5, 5%. So still very attractive in today's market. So I'm happy to dive into the nuances there a little more closely, but that's one of the unique product offerings that we have to get the home under contract. Um, we also offer our sellers who for transactions that Rome facilitates a 45-day protection plan. So our goal is to hit a 45-day close, which is very similar to a conventional close. If we do not hit that, then we will reimburse the seller for their principal and interest payment from day 46 through closing. So
Ben,
that
Ben, go
Go
into a
ahead.
little bit more detail on that because what does it
Yeah.
typically take? How long does it typically?
So we strive to close in 45 days. We've closed as fast as 26 days. That happened last month. We were all pretty jazzed up about that. Typically, I would say a buyer who works with Rome closes in 45 to 60 days, as opposed to 90 to 120. But as I mentioned, our goal is to hit 45 days, and if we don't hit our goal, the seller will reimburse on a prorated basis for their mortgage payment. You can think of it as an insurance policy to make sure the seller is comfortable for the risk that the transaction takes a little bit longer. I would say that's the one downside to assumable transactions is the closing time frame is a little longer. But if we all go into the transactions with our expectations managed, knowing that it's a 45, 60-day close, like that provides everyone with confidence and kind of eases angst in regards to the timeline. Uh, cool. Sorry. Lastly, and most importantly, so once we hit the contract, once the home is under contract, we assign each transaction a dedicated closing coordinator, a Rome assumption specialist. And what that does is provide increased certainty of close. So we don't want to, we've pre-qualified the individual, but we're under contract. The lender's giving us some pushback on a few items. Our assumption specialist slash coordinator will step in, will be the buyer's guide throughout the entire process, ensuring the transaction proceeds smoothly, ensures that we close in a timely manner, like that 45 to 60-day window that I mentioned. And we fight on behalf of the buyer if there's any erroneous denials, and we're really just a guide to make sure that everything is on pace to close. Because, like I said, once you get to the transaction stage, like a contract stage, you still have a lot of work left, and we want to make sure the transaction closes and everyone gets paid. The buyer gets the new home, seller gets the equity out. And we do about 45 to 50 assumables per month. We have strong relationships with all of the major loan servicers. We even have inked partnerships with a few of them and have weekly pipeline calls with them. So we're able to move our deals along much quicker than the average individual who goes out alone. So how do we help buyers agents? Who, I guess it would be helpful for me to have some context, like who here works on the buy side versus the sell side, or you guys play on both sides of the aisle?
I'm on the buyer side.
Okay, cool.
Who else? Who else we got? Someone else. Someone else was just saying.
I have a question.
Okay.
Yeah, sure.
I had somebody that was actually looking at this when they mentioned it last week, so I went online to kind of check it out and see how you guys function. But I had a question about if they don't have the total down to pay off that equity, and you take out the loan, and you pay it off for them. Do they have now 2 loans that they have to pay at the close of escrow?
Correct. They would have 2 loans to pay each month. The second loan is pretty flexible. It's a 30-year fixed rate term, so they'll know what the payment is every month, and it's prepayable at any time with no penalty. So it could always be paid down sooner. But yes, it is. The buyer would be paying 2 loans each month.
Okay, thank you.
Yeah, and so how do we help buyers agents? As you can see here, this is what the average Rome search looks like. So we always recommend that buyers agents send the blast out to their buyer pool to kind of re-engage folks who are on the sidelines because of affordability. And you can use Rome to find homes. You connect with your buyer on touring, on the contract stage, but Rome was really home base for you to search for homes for your clients. You can set up saved searches, alerts, and we're constantly building out new tools for agents, like an agent portal. We're working on building out an API so that we can connect to whatever tools you use in the back end to save listings and send listings to your clients. But for the time being, we always recommend signing up for Rome account, browsing on behalf of your client, or sending Rome to your client to browse, and then setting up saved searches. And then you handle the dirty work of touring, drafting the contract, and then we'll be buyer side throughout the entire process, ensuring that the right documentation is attached to the offer. We can also vet. We can also talk through listing whether or not the home. We can also quell any sort of fears a listing agent has about contracting with an assumable buyer. So we want to work in tandem with you to ensure that your buyers can get to that contract stage. And we are not agents ourselves. We will not be stepping on your toes. We truly want to be your partner.
Hey, Ben, and I know you guys are, so we got a lot of agents in here from California, but you
Cool.
guys are not just based in California, right? I mean, you obviously are from New York, but you offer this platform throughout all the United States, correct?
Not all the United States, but all the
Okay.
major markets. We launch a new market every 1 to 2 months, but we're in California. We launched there about 5 months ago.
In California, okay.
Yeah, so we are live there.
Cool.
Cool. Do you want to start the next page?
I have a question.
Oh, sure.
Is your system Rome does help finding the houses that have we can assume the loan for them, or if not, what is the best way to find
Yeah,
the
that's
house?
exactly what Rome's for. We show all homes for sale with assumable mortgages. So you would browse on withrome.com and like I said, send listings to your client. You can have your client browse on their own, and then we'll be by your side throughout the entire process, ensuring that your clients get a home under contract.
Okay, I have a question.
Sure.
So your platform, the way you retrieve the homes that are VA and FHA, are you in tandem with the MLS? Like, so if I found
Yes.
okay, so if there's a home listed on your platform, it's also going to be in the MLS or vice versa?
Ex exactly. So what we do is we cross-reference MLS data with loan data, and that's how we show homes for sale with underlying FHA and VA loans.
Okay, so that keeps us from a double process because I was thinking I would have to look on both platforms to search for my client because you wouldn't have everything, but you have everything that we would have access to also, right?
Yeah, exactly. I don't know what your normal, search motion is, but we show all homes for sale with underlying FHA and VA loans. It's all MLS data and a
Okay.
cross-reference with loan data.
Okay.
So I think it sounds like, Rita, you're asking if he has everything that's on MLS, but I think to clarify, it's only the homes that have assumable loans
That's what I'm asking.
and
No, no,
are
no.
on MLS.
No, that is the question. Because
Yeah.
otherwise we would have to pick through, and how would we determine whether or not that home was assumable? You know what I mean? How do we do that on our own, going through MLS listings one by one? I'm assuming this method, going through Rome, actually saves us all of that effort, right? Because he's already done the work. They've
Totally.
already determined who are the the FHA and VA assumable loans, and they've already retrieved that data. And so therefore we would just only have to use his platform. We don't have to cross check through MLS. It's the same data, only it's already been siphoned through, correct?
Yeah,
Yes,
totally.
and let's let Ben get through most of this, and let's try and hold our questions because I feel like he's going to answer most of these along the way. Thank you, Ben.
Yeah, sure thing. So how do we help listing agents? So we have what we call our listing agent program, and our goal is to help listing agents get more inquiries on their assumable listings, and which ultimately will lead them to a contract. So how do we do that? We do that physically and digitally. So actually, I'll start with the digitally first. So um, as I mentioned, all homes for sale with assumable mortgages are on withrome.com. So we offer the ability for listing agents to have their homes featured on withrome.com so that they appear at the top of search results. So more eyeballs on our website. We have about 75,000 buyers who come to our website every month to move their homes. So that visibility does tend to increase the number of inquiries that agents receive. We'll also send buyers to the listing agent when someone makes an inquiry on their specific home. So if someone goes on withrome.com and says like start the process on your specific home, we'll let you know that that's happening and offer to connect you to. We can also provide photo pills like you see in the middle of the screen here that kind of states the home's low rates within the photo, which is will catch more folks' attention on websites like Zillow and Redfin. We'll also help you market the public remarks or to better serve finding prospective assumable buyers. And then physically, we can provide you with custom open house materials and educational materials that lets prospective buyers better understand the benefits of taking on an assumable mortgage. And one new initiative that we recently launched, and actually Julius is spearheading it, is we're providing folks with sign writers or standalone signs, whatever the agent prefers, that kind of highlights the home's low rate. So we do all this at no cost to the listing agent or the seller. Our goal is to ultimately work on the transaction and charge a fee for our services upon closing. So we spec a lot of time and energy and money up front to try and get agents more visibility on their listings. So I touched a little bit on this earlier, but here's how the mechanics of Rome's secondary financing works. Our minimum down payment is 5% of the purchase price in all states other than Texas. So for California, buyers can put as little as 5% down. So in this case, we see a $315,000 home. The assumable mortgage is about $90,000 short. So the buyer could bring cash to the table to cover that difference. But a lot of times, folks who are purchasing $350,000 homes don't have 90K lying around. So we can bring that down payment to as low as 16,000. And that excludes ancillary closing costs, but the down payment itself would be 16,000 in this case. And the blended rate, looking at 287 and 1025 would be 5%, which is still great in today's market as compared to a 7% conventional. So I'm happy to answer any questions about the financing product at the end, but a really powerful tool to help get buyers under contract. Seller protection plan. I also hit on this a little bit earlier, but our goal, it's an insurance policy for sellers, whereby if we don't close within 45 days, the protection plan starts ticking, and from day 46 through closing will reimburse seller for their principal and interest. So just for example, if the buyer works with Rome and the property closes on day 60, we would write a check for 15 days worth of principal and interest and mail that to the seller after the transaction closes. Okay, so how does Rome make money? I think I saw someone ask that in the chat. A great question. We charge a 1% fee to the buyer upon closing. We only make money if the transaction closes. There's nothing due up front and there's no down payment. So our incentives are fully aligned with buyers, with sellers, with agents. We have seen a lot of sellers and buyers split our fee. A lot of folks want us in the transaction, given our expertise and our experience, plus all the ancillary services we offer. So that fee can definitely be split, but for all intents and purposes, like our fee is contractually with the buyer, we charge a 1% fee at the closing table. So and what's awesome about the fee is 5,500 in this example seems like a lot, but like it pays for itself within 6 to 10 months typically. Sorry, and to clip with the interest rate savings as compared to a conventional. Okay, so how does one work with us? Like I said, register your listings or buyers with Rome. We can help you promote that listing. We can also talk to your buyer about pre-qualifications and kind of the contractual stage. We'll be by your side throughout the entire process as your guide, and we'll also be the liaison between buyers, sellers, and lenders. Our goal is to close. That's all we care about, and we offer all of our kind of services center around that premise. All right, who has questions?
Yeah, I have a question.
Thank you for listening to me.
I want to know, how do you sell that last part? You said the buyer and the seller could split the cost, the 1%. How do you sell that? I mean, how do you present that?
Sorry, what?
So Rita, what she's asking, kind of like, Rita, when you ask for credits from your seller, you can ask for that 1% to be covered
for
your buyer.
I know, but the question is, how do you explain to them what it is?
I don't even know that you need to, Rita. In most cases,
Okay.
you could probably just do a seller credit to buyer, and then it's really up to the buyer to leverage that that credit in whatever format they'd want.
Yeah, and I would say like sellers also want us in the transaction. They want to make sure that their home gets sold, and we provide increased certainty that it actually happens. Plus, we offer our seller protection plan, so it's in their best interest to be on board. And we've seen a lot of people split the fee, with that in mind.
Jen, you have a question?
Yeah. When it comes to the VA loans, if you have an assumable loan and the seller, he could lose entitlement if he allows somebody that's not a veteran to assume the loan until that loan is paid off. So that's one question I have. The second one is because of the fees that are allowed by a buyer to pay on a VA loan, it would behoove them to definitely give the full 1% costs in a credit from the seller, because that goes against how much we can charge the client on the 1% that they're allowed to get charged to them on a VA loan. Am I looking at
Yes,
that the right way?
both great points and slash questions. So yes, you are. So yes, we do face some resistance from VA sellers who don't want to part ways with their entitlement benefit. And just to explain, when if a non-veteran buyer assumes a VA loan, their entitlement will remain with the home for the duration of the loan. So they won't be able to reuse their full VA benefit until the loan is paid off. With that said, we work with many, over half our business is non-VA to VA, so it's quite common. There are many reasons why a veteran would be open to parting ways with their entitlement. And also, it's not a binary decision. It's only the allocated entitlement is what's tied to the property. So, for instance, if a seller is selling a 300K home that they use a VA loan for, they'll still have $500 to $700,000 worth of VA entitlement to use for their next purchase. So it's definitely something that we evaluate on a case by case basis. And we, as part of our service offering, we're happy to chat with the seller or the listing agent to walk them through the costs and benefits of having a non-veteran assume the seller's loan. And if a veteran assumes a loan, then the entitlement gets restored. It's a non-issue. This only comes up when a non-veteran assumes the loan. And in terms of payment, yeah, for most of our VA deals, yes, the seller does end up dispersing the funds to Rome, but that doesn't mean the seller is actually paying the full fee out of their pocket. We typically will help structure the contract so it makes sense for the seller to disperse the payment. I'm happy to dive into any more questions on the VA front. I know it's a tad complicated, but so happy to answer any questions there.
Yeah, I think Kristen had a question similar to that question that Jen had. Go ahead, Kristen. You're on mute.
Sorry. Part of it was, do you have to qualify for a VA loan in order to assume a VA loan? And it sounds like you don't necessarily need to be a veteran in order to assume a VA loan, is one of the things that you're answering my question to. So then the next part of that question is, are we to assume that if a home is on your website and it's labeled as a VA loan, then that seller has approved the sale of their home through this assumable loan program, and they understand that they could forfeit that part of their entitlement? Is that correct?
That is a great question. So we show all homes for sale with underlying VA and FHA loans. We have not spoken to all sellers on our platform. So there is a chance that the veteran will reject an assumable offer. That does happen, just in full transparency. However, we do offer the opportunity to have a Rome representative call the seller and the listing agent to help walk them through the cost benefit analysis of parting ways with their entitlement. But sometimes, it's a binary decision for the seller, and they'll just say no, thank you, and then you'll have to move on to another home. But like I said, over half our business is non VA to VA. And one thing I also want to highlight is that VA mortgages can be assumed for investment purposes. So if you have any investor clients, it's a really attractive buying opportunity for those folks, just given where rates are. They can make a really nice cash on cash return buying a suitable mortgage. So those have no occupancy requirement and can be rented out day one.
Those would be
Okay.
good.
I did have another question, but I want to give another opportunity to
Go
someone
ahead,
else.
go ahead, Kristen. I can answer ask my question right after you.
Okay. Okay, so I am looking at the website right now, and some of them are labeled VA loans and some are not. So are we to assume that those are supposed to be FHA, if they don't have the little VA loan tag on
That
them?
is that is correct. That is correct.
Okay, and those have to be owner occupied by the buyer, right? With the
Correct.
FHA?
There's a 1 year occupancy requirement legally.
Okay. And they got to go through all of the qualifications for FHA loan in order to assume that loan.
Correct. Correct. For FHA, they have to meet the FHA qualifications, and for VA, they have to meet the VA qualifications.
Great. Thanks.
Hey, Ben, so my question is basically, so you do conventional as well, right? It's not just FHA and veteran.
No, we only work with assumable
Oh, okay.
mortgages.
Gotcha. Okay, so if a
Our
veteran,
our sorry, the second mortgage is not assumable. It's an add-on to an assumable mortgage, but
uh-huh,
we don't work with homes that have conventional mortgages.
got it. So if a veteran is taking over an assumable loan from another veteran, how does affect that their benefit?
Yeah, great question. So if the buyer has their full entitlements, then the entitlement of the seller or has more entitlement than the loan requires, then the seller's entitlement will be fully restored.
Okay,
So it's a swap of entitlements, and the seller can then go on and use the full power of their VA loan on any home.
gotcha. Okay, my other question is, so can I put them actually in the chat? So, but can you walk us through a scenario? I have a client that wants to purchase $1 million home, and with the current interest rates of 7%, but only qualifies for 900,000. Would this program give them an opportunity to get into a home like this?
They qualify for $1 million home with conventional rates, correct?
No, they
No.
qualify for 900,000.
Sorry. They qualify for 900,000 with conventional
But
rates.
yeah,
Yeah. So Rome, I think of Rome as like being able to like 2x the buying power of the average individual. So they, depending on the home, they would most likely be able to afford that $1 million home if they were to assume the seller's mortgage, because instead of 7%, they could take on a 2 to 4% rate, and their buying power doubles.
gotcha.
So
Okay,
that's a
thank
great
you.
way it's a great way for buyers to either put more money in their own pocket or afford more homes, depending on how you look at it. So
Yeah,
their buying power goes much further with an
okay,
assumption.
thank you.
And we would be happy to pre-qualify your buyer if you send them our way, and we get to see what type of home they can afford. So
Okay,
feel free to DM us after or message us after this
okay.
meeting.
Can
Go
you
ahead,
put
Jen.
your info down? But I see the link is over here, the register. I clicked on it, but it said when you take a picture of it, it's just for listing agent program. There's also for buyer, right?
Yes, correct.
Okay,
Correct.
Jen,
thank you.
Jen, go ahead with your question.
My last question would be, you said that there's an occupancy requirement. So how does that work if you're trying to do this for an investor? Because that would, like I was thinking, man, we could do some DSCR loans that way with purchases as an investment. But you said there's an occupancy. So I felt like there was a contradicting statement, or maybe I misunderstood it. Could you please clarify?
Yeah, sure thing. There's a occupancy requirement for FHA loans. There's not an occupancy requirement for VA loans. So investors can purchase VA homes and rent them out immediately.
Okay, thank you.
Go ahead, Chris.
So if we are signed up on your website and we send a link to some properties or the website in general, and a buyer decides that they want to proceed with one of these homes, but they don't necessarily check in with us as the realtor, and maybe we don't have a BRBC signed. Is there a link? Is there a way for you to track that they've been working with us and we gave them the site to look?
Well, if you send them our way, we'll know that you sent them. If they
Mhm.
come on their own, I don't believe we would know
Yeah,
that they were associated to you.
Ben,
But
we normally
okay.
work off like affiliate links and all that stuff. So that I think that Chris, that's kind of what you're asking about, right? Like
Yes,
if I see it,
yes.
and I'm also nervous about, I'm not nervous, but sending clients to this site and then just ghosting us, right? We're
Mhm.
normally used to having affiliate links where it's attached to.
Yeah. Well,
Thank you.
I guess my question is, wouldn't you guys be representing them in the transaction?
We will hope so, right? But in
Well,
some situations,
yeah,
if we're dealing with
we
like investors, we don't want to push this out there to investors because some investors we may have not taken out and signed a BRBC. So
Mhm.
if we push this out to investors right now, um, and they go directly to your site, we're pretty much losing that client.
Yeah, I mean, there's a lot of leads that
Yeah.
we send them property alerts and things like that. We want to entice them with, our skills at finding homes for them. But if we haven't yet gotten a BRBC or some type of agreement from them, should we just like hold this in our pocket until we get that signature? Or will there be an affiliate link if we send them a link from our account as an agent to them? Is that trackable?
Well, I'm trying to think mechanically, like if let's say we had an affiliate link for you, and then they decided not to use you on the transaction, like I guess what would we be able to do at that point? Like we can alert you that they're going under contract, but how would we get you guys back in the fold there? Like what's like the kind of the ordinary operations there?
But you wouldn't.
Yeah, you wouldn't, Ben. Honestly, I
And
mean that's
but
really between the agent and their client
Right.
with a contract. And I think that their concern right now is that some of the people that they're trying to find opportunities for, they don't have a contract yet. My thought is going to be this, and Ben, you tell me if this might make sense. I'm still going to leverage Rome's website to determine some of those properties that could be eligible, but then I will go on the MLS and send it to them that way. So that way they don't know my source until they're my client.
Yeah,
correct.
that works too. I mean, like I said, we want to be your partners. So like we are open to creating whatever workflow is best for you. Like we're not in the business of stealing agents or like stealing customers. Like we want to be your true partners here and close with you and just, make and have you guys be repeatable clients with us. So,
Yeah,
um,
and Ben, just so you know, and Chris, just to kind of piggyback back with you is the value that this is bringing to a lot of our customers or a lot of our clients right now. They don't need to go to withrome.com. We can go there and search that, but all of these properties are on the MLS.
Mhm.
It's just some of our clients may not know, hey, these are assumable loans. So now this is bringing more value to you as the agent, right? Because now you can go and
Right.
search. Because I'm gonna tell you right now, Ben, I searched on your site for properties that are not even on there. I searched on there to see other properties were VA or FHA approved, and I've got a couple of them already VA and FHA approved. And you guys break it down. Like I love the site. It breaks down
awesome.
everything they have on there. So this is a great tool for you guys to take advantage of right now to put in any property that you guys may have on the market or for sale by owners that's raising their hand and probably don't know anything about this. This is a perfect opportunity right now. Jen, go ahead.
I might have missed it because I came in a little late. Is there a fee, monthly fee, or is it just the 1% that's being charged to the buyer that could be split or whatever with the seller? But is there a monthly fee to gain access to your website? I did do some search of my own, And obviously, to go through the MLS, you have to use trigger words because not all of it's going to say MLS. So you have to say low interest rate or FHA assumable, VA assumable. So I'm assuming you guys are doing all these keywords to find the data on the MLS to put it into your software. But is there a monthly fee that we have to pay, or do we get free access, free, as you call it, roam, free roam, to go into see your website and only have to pay? The buyer only has to pay the 1%, however we work it out between the buyer and the seller.
Yeah,
It's
Ben.
completely free.
Yeah, Ben. But
The
I
only
don't
way
think
we
I don't think we cover that either, Ben. Sorry to cut you off, but I don't think we cover that about the FHA fee and the VA fee. I don't think we cover that.
What fee?
There's a fee. Ben, can you
for
cover that?
you mean like closing cost fees?
Correct.
Yeah. So the each transaction will have, kind of ancillary closing costs. Like the FHA has like a $1,500 like application fee. There's standard title, taxes, insurance type fees. There's actually no appraisal required for an assumption, so you'll save there. You'll save a little bit with lender's title because the loan already exists. So even with Rome's fee, the total closing costs are typically a little less than a conventional loan. Um, but yeah, there are typically 1.5%, 2% closing costs plus the Rome fee. So I would say like 2.5 to 3% of total closing costs. And to answer your question, that's the only fee. Like there's no monthly fee, there's no fee for our marketing services. We only get paid if the transaction closes.
I'm sorry, that was kind of confusing. So let's say the purchase price is 500,000. You're saying 500,000 your fee for the application fee, and some of the lenders are still going to require an appraisal. It's a matter of what DU or what the
No,
automated. I don't understand how you can.
appraisals
Yeah.
are not required for assumptions because the loan already exists. So they're only required if you're taking out a secondary loan. So no appraisal necessary if it's a straight assumption. So yeah, on a $500,000 home, maybe closing costs are anywhere from 2.5 to 3%. So or 2 to 3%. So call it 10 to 15K.
No, I was referring to what your fee is, not what the other escrow title notary.
Yeah.
I'm just asking what your fee is
Oh, 1% of the purchase price. So
on
it'd be
FHA,
5,000.
on FHA and VA both.
Correct. Our fee is agnostic to the loan type.
And that's part of the $1,500 application fee that Lawrence was referring to?
No, so those are fees to the lender that are standard closing costs. Our fee is in addition to standard closing costs. It's a platform / service fee for our pre-qualification, second mortgage, seller
So,
protection plan, dedicated transaction coordinator. That 1% fee unlocks access to all of those services.
Okay, so I'm a little confused.
me too.
Are you a lender or no?
No, we are not a lender. We are a third party platform whose mission it is to get folks into homes with low rates and solve the home affordability crisis. We are not the lender.
So
The
then you
lend
are in addition to, so the people that are all going to be involved in this process, we're the assumable loan has a lender already attached to it. So you're saying that this lender by law has to allow this buyer to assume that loan, and you are the person facilitating that process because you know what more than we know.
we're experts in the field. We bring, we've closed about 50 assumptions per month, and we have relationships with all the major lenders. We're able to get deals closed quicker than folks who go at it alone. So
And you
we
provide the platform, right? You provide the platform, you have the guarantee. There's so many reasons why you bring a tremendous amount of value to this process. I get
Well, I
it.
just want to understand it. I'm not devaluing it. I just want to understand it because for a few minutes there, when you said like the secondary loan, my thought was then you are a lender because where is the second? So I am a little confused. So you are another party in this whole process, and that's why
yes,
you
and
have an additional fee on top of it. And I just need to know how to explain this. You understand what I mean? So I got to really understand it. So Forgive me if
Yeah.
I'm a little
No, no,
lost.
no worries at all. Let me, and forgive me for not doing a better job explaining. So, our goal is to get buyers into these homes, and we provide a slew of services to make that happen. Um, and in terms, so we are not the lenders ourselves. Like, unfortunately, assumptions can be quite cumbersome and take longer, and so we help ensure that process is smoother and quicker, because we don't want someone to go under contract and then 3 months into the contract, they're still not closed, right? That'll cause the contract to collapse. So what we do by providing like a dedicated transition coordinator is increase the certainty of close, if you will. And but we're not just a closing service. We are a platform to get buyers into homes with low rates. So the 1% fee unlocks access to everything. And in terms of like who our secondary lender is, we are not the lender ourselves. We have a relationship with a lender who can provide loans behind assumable mortgages. It's quite hard to find a product like that. Not many lenders will do second loans behind assumptions. So we connect all the dots for buyers to ensure that the transaction goes under contract and then closes smoothly in a reasonable time frame.
Okay, so then you actually, when we hook you all up, you talk to this lender who has the loan that this VA,
Yeah,
that the
it's a
seller has.
seller's lender. So
The seller's
we're
lender.
the liaison between all parties involved.
Okay.
We open the assumption so that the process can get started right away. We help the buyer with the application. We help them with the underwriting. We help them manage any lender conditions that come back. We're there each step of the way to ensure that everything proceeds normally, and we can get to that closing.
Okay.
Yeah, Rita, and just think of this like a 1031 exchange. You're not going to know the ins and outs of all the 1031 exchange, right? That's what they do. They do that. They're the middleman like a 1031 exchange.
Well, I haven't done one of those yet, so
Well,
I wouldn't know.
Okay, so yeah, it's kind of 1031 exchanges. You got to hire a company to deal with all that nuance right now that Ben is talking about. Typically, in these assumable loans, it takes 3 to 6 months for these things to close. These guys are guaranteeing 45 days.
Yeah, I've heard. So
Right.
that's
So
why I wanted to understand.
yep, 100%.
It's like a short sale too, that you can pay companies to, usually 1% to help with a short sale. And it's the
Correct.
same concept. Similar concept, I should say.
Okay.
Hey, Ben, I have a question for you.
The value is definitely there. Like Joseph said, I agree 100%. Because I just closed an assumption and it took like 2.5 months and it was a pain in the ass. And I wish I had someone like Rome there pushing this thing through so we could get it closed quicker.
Who was the lender on that one?
It's a credit union. Can't think of it. If I think of it, I'll pop in again. But yeah, it was a credit union. But they were forever.
Okay.
And so the application you're talking about, this application has to be put in with this lender that has the current loan. Is that what you're saying? I'm trying to.
Correct. Yeah. So the buyer takes over the seller's loan as is. So the seller's lender becomes the buyer's lender. They inherit their interest rate, their monthly payments, their remaining term. So that the assumable loan is not like a new 30-year term. If there's like 25 years remaining, and that's how long the buyer will have the loan for. And also, it's nice because a lot of interest on a 30-year amortizing loan, a lot of interest is paid up front. So if 5 years of term means that a lot of the interest load has already been paid. So the new buyer will start mainly paying down principal in short order.
Jeff Russell said Navy Federal was the seller's lender.
We have a good relationship with them. We typically close with them in like 50 days.
Okay, cool. Joseph,
I have a question. Yeah, I have a question for you, Ben. It sounds like you guys have done a really good job of teeing us up as real estate agents to not worry about the nuance as much as learning how to find the sellers, find the buyers, and put them together, which is our function. Which I love that. Do you guys have like training resources in addition to some of the materials on your website as well? So that way, as we better understand this and want to continue to have dialogues with our clients, we have something that we can go back to and watch or reference?
Yeah, we have a lot. Well, we have a lot of resources on our website. We have an agent portal, or not portal, agent resource library. You can pull down different documents that are helpful, and you can also always give us a call. We'll be here for you. Happy to answer any questions. We can also like set up an info session if that's helpful. We're here to we want to make your lives as easy as possible, and whatever you need from us, we'll provide.
Super appreciate that, Ben. Thank you, man.
And
We're really glad that we've had you guys on today too. Thank you.
Hey,
I'll
and then
I'll link the agent resource library in this chat.
yeah, yeah, and Ben, just so you know, so I talked to I forgot her name on the weekend. She works weekends. You guys work on weekdays.
Oh, Crystal,
Crystal.
Cindy.
Yeah. No, it was Crystal. So these guys are working 7 days a week. You got questions, you can call the line. Somebody's going to answer 7 days a week.
Yep.
I had a great call with Crystal. She gave me an overview. That's why I was kind of asked about the fees and all that stuff, which was great info. But the marketing material, if I sign up as a listing agent, what do you guys provide me as a listing agent?
We do a few things for you. We like I said, we feature your listing. We also send you custom open house materials, and we recently implemented yard signs / sign writers, whatever your preference is, and we'll have one of those shipped to you that just states like the home's low rate, adjacent to your sign, so that when buyers are driving by, they'd be like, holy smokes, I can get this home for a 4% rate. Like I'll hop in for a showing. And
Got it.
we're continuously adding new perks and resources and to that program. So if there's something else you need, like let us know. We'll try and make it happen.
So I should be
I'm not.
advertising this listing. Like right now, Jeff Russell has a listing in Huntington Beach right now, and it's a FHA. I should be advertising this in the remarks directly, correct?
Yes.
This
We
is my
always recommend
goal.
stating like X% assumable mortgage available in the remarks.
Right.
That way buyers across Zillow, Redfin, Realtor.com can identify that the home has a low rate mortgage and can jump on it. We've seen a lot of agents have success doing that.
Let me ask you this question, and this will be my last question. I know you guys got to go. We are at the top of the hour. If I have a 14-day listing, means the FHA seller, is that going to be a problem to get that? I mean, can you do it? Can you do it faster if need be in the 45 days if we have everything set up beforehand? Like, can I get that done in 25 days?
It depends on the lender. Likely not, unless it's one of our partner lenders.
And
So
if I'm a lender, how do I get paired up with you?
if you're if
Yes.
you're a lender from what standpoint?
So if I'm a lender, like I'm a broker, right? And I have my LO license, right? How do I partner with Rome?
We typically work with one lender for secondary financing. We're always open to speaking to new folks about secondary financing and expanding our relationships, but for the most part, we work with Barrett Financial as our secondary lender behind Deception. But yeah,
Yeah.
if you have someone who's interested in working with us, we're happy to chat.
Awesome. All right. I think we're
And
good today. Ben,
and,
thank you for this time too.
and sorry, one more thing. So
But
the first resource is this case study with Kevin Hosner. He's one of our top performing buyer agents. He's doing about like 30 assumptions per year. So there's a little video there if you want to catch that about like how assumptions has changed
are
his
you
business and ultimately his life.
are you able to put that in the chat or no?
Yeah, for sure. Let me do that right now.
Joseph, are we good? I think I mean, Ben, you gave us a ton of information for us to kind of soak in. A lot of properties right now I know that are sitting on the market, probably FHA or VA. I didn't know that you can assume a VA loan if you're not a vet. So this has been great information, helpful. Julius, thank you too for jumping on too as well.
Yeah, of course.
Yeah, and real
Yeah,
quick, just to kind of give everyone one last, clear instruction. to go get signed up with Rome, can you guys just verbally share with us exactly where to go? Is it just Rome.com?
Great point. With Rome.com. So I just
With
threw that in chat.
Rome.com. Perfect. And then where do we go from there to sign up as like the listing agent side? Because it sounds like that's the program where we register ourselves, right?
Yeah, so the listing agent side, if you have a listing, just shoot us an email and we'll get you. I can also send that. Right. Here's the listing agent sign up form.
Awesome.
And then also once you're signed up for our listing agent program, we'll notify you whenever a new listing of yours comes online that has an assumable mortgage. So you'll be in our system going forward.
That's awesome. Awesome. Thank you so much, Ben. Appreciate it.
You can also scan
Yeah.
the QR code here and sign up.
Perfect. So the one on screen right now. So guys, if you have a second before we wrap this call, make sure and register by scanning that QR code or grab that link. Because remember, like these are the types of tools and partnerships that we need. You want to separate yourself, you need to come with different approaches, different offerings, and more skill sets and abilities than others have. So having a partnership with Rome is absolutely instrumental. You don't want to be that person if someone comes and goes, hey, have you ever heard about like these assumable loans? Don't be that person trying to say, oh yeah, that's all just nonsense, because you don't have answers to the question, right?
100%. And Ben, that's the main reason I brought you guys on, right? Because I want to bring you on our social media, our sphere of influence and our social media call to go more in depth with how we can advertise and market this thing and take it to the next level, right? Kristen, you had a question, I think, on your end.
Yeah, I'm signing up right now. And it's asking what market do we operate? How many zip codes can we put in there? I cover an entire county and a half.
As many as you want.
Okay.
No limit. No limit.
Thank you.
Yeah, I
Super excited.
I literally put Vegas and California in there, Kristen. So go at it.
Yeah, and let us know how we can be helpful. Like shoot us an email. You have our contact info. Like let us know what you're seeing in the market, what other tools we can offer to help you close more deals. Like I know I keep stressing this, but we want to be your partner. It's a win for both of us. So if you have thoughts or questions or concerns, just feel free to ping Julius and me, and we'll get a handle for you.
Fantastic. Thank you guys again, man. We really appreciate you having us on, or you having the time to come and share with us. Man, I'm pretty fired up about this. I'm in process of getting registered myself as well. So thank you guys again.
All right. Well, thank you guys for giving us the time. It was great meeting you all, and we're looking forward to a really fruitful relationship. So don't be a stranger. Ping us when you need us, and we'll be standing by.
Thanks, Ben.
Thank you.
And Mandy
Yeah,
has one more question.
wait a minute before you guys
Yeah.
all here, or even Ben and Julius. So Lawrence and I actually we do a mastermind every Thursday. And just like Lawrence mentioned, it would be really cool if you guys could come up on, because I'm our social media coach and Lawrence is covering SOI. So they really work well together. And so actually do Lawrence and I. So if we could have you guys maybe on a Thursday, that would be awesome. Like dive into like how it could, like what we could do on the social media side, how we can like address this to our SOI, like in like I don't know, like an email or something. Like if you guys can help us with that, that would be awesome as well. And yeah.
Yeah, that would be great. We also have a social media team, so we'd love to put everyone together and figure out how we can cross promote. It sounds like an amazing idea.
Yeah,
So
Ben.
let us know what weeks work, and we can schedule something.
Yeah,
Perfect.
Ben, we host every Thursday, but we also have other coaches in here that deal with our
Yes.
CRMs, our more listings, platforms, wealth building, all that good stuff. So we're going to have you guys on other calls. So we appreciate this time, but we're going to have you guys on more calls with us.
The more the merrier. We love it.
Appreciate it, man.
All right, thank you.
Thank you
Perfect.
both. Thank you everyone for joining.
Yep.
Okay,
Thank
hold on.
you.
Thank you,
Hold on, guys.
Lawrence.
Agents, do
I'll
not
Right.
disappear
stay in
right
touch.
now. Agents,
All right. Thank you so much.
Ben and Julius. But for our agents right now, like we actually had it on our coaching call the other day. Like we want to let you guys know also like what we are doing individually, like every week. Because sometimes maybe you miss an email or whatsoever. So Lawrence and I obviously do on Thursday our mastermind, social media, and SOI. But I don't know, are they still here? Hold on, because I
Yeah,
can't see
Kathy and Robert are still on. I can see them.
Okay, or Robert, like what are you guys covering this week? So maybe we can mention it on a Monday. That way you guys know, yeah, maybe what sparks you this week to watch, to learn, to listen to. The floor is yours,
Hi
Robert
there.
or Kathy.
So we're continuing on with our book review of The Full Fee Agent tomorrow with marketing with tactical empathy and touching on emotions to get people to talk to you, sellers to talk to you, so you can offer them our solutions. Start with the cash offers, then, online offers, what Robert does, or traditional listings. So that's what we're doing. My mastermind is every Tuesday at 10 a.m. And I'll put the link in the chat.
Perfect. Thank you, Kathy. And then Robert.
If Robert's not on, I know that he said he is having a Tony Robbins coach on his call this week as well. Yeah. And he put it in the chat right in the beginning. So I'm not sure if it's still showing up.
Yeah, it is.
Let's see. Perfect. Yeah. So he put some details so you guys have all the info for his mastermind this week as well.
It's
Okay.
morenowlistings.com.
Perfect. Thank you. And then I will be covering on social media mastermind. My part is keywords actually this Thursday. So I will be like diving into keywords. What are the important keywords? Depending also on your area, because it's not just like any keywords. You can be really strategically use them.
Yeah, and then what I'm going to cover this week is kind of what we were discussing with the assumable loans. We're going to use thanks.io to start pushing out some of this stuff, right? And we're showing you how to market this stuff to people that are for sale by owners, expireds, some of these people that are not looking at this other side where, like I said, the market's kind of stale right now. If they're not looking at this, they need to, right? So let's put that in front of their face. We're going to use thanks.io to start doing some of this, right? And then we're going to also use our title reps. Title reps are going to be able to pull the FHA, the VA loans, right? People that purchased back in 2020. So this is what we're going to go over on Thursday.
Perfect.
All right?
Well, thank you so much. And thank you, Joseph, for giving us the opportunity to share a couple things here this Monday. Sorry. I'm already
Absolutely.
ahead.
No, thank you guys. I appreciate it. You guys did an amazing job. I want everyone to come back next week with some great wins. Remember, this is not a show and tell meeting. It was originally called the How to Mastermind for a reason, because we want to not only have people come on and not tell us what to do, but how to do it. But second, and more importantly, take concepts that resonate with you and implement them now. You're not going to be perfect, but you'll never be perfect if you don't ever start. So thank you guys. Have a great week. See you all back here next Monday. And thank you, and Lawrence and Mandy, thank you guys especially.